Well, I did a thing. My chat group and I, being the degenerates we are, talked ourselves into 2x levering into the Meta earnings tonight. As many of you know, my two favorite companies out there, Google, Meta, both posting within 20 minutes of me starting to record this video. And Google's been a little heated, right? I mean, even if you look today, Google, I mean, now approaching over that 30 price to earnings multiple we've been calling for since 17, has absolutely destroyed. And I don't want to buy it as aggressively on these runs. Whereas Meta, you know, it's been primarily flat. I mean, it really hasn't actually done all that much going back to February of this year. And I don't want to be that as the primary bull reason that we 2x levered it, but it is a fairly small position. And the way we've levered it was through the Direxion daily. You can either do the 2x bull shares on Google or Meta. They've been recently releasing these into a variety of stocks. It's like the 3x lever ETFs. You can do 2x. I don't have enough cojones to 3x lever. And just for some entertainment value, I only bought like 68 shares of this. It trades under the ticker METU. So yeah, I threw a few thousand US at it. Very excited. If it works out, I'm going to roll the shares over into Meta stock because I still want to own a bit more of it, regardless of what happens. Like, let's say Meta drops materially. And the way this ETF works, basically, if Meta goes up 5% by tomorrow, I will be up 10%. Meta goes down 5% tomorrow, I will be down 10%. It's just, yeah, 2x leverage. It's the same with like the 3x levered ETFs. People are used to seeing like TQQQ, which 3x levers the triple Qs, right? But this is kind of like a modest way, in my opinion, of playing earnings, which you should never do because stocks can go down on even good earnings. And we did have some material news today that sent the markets into the red in a way that I was not exactly prepared for. And another reminder why leverage is risky. But here we go, man. Google's going green here. Maybe we bought the dip today and we're going to make some, you know, some quick tendies tomorrow. But the news that came out that kind of shocked the market here was the continual interest rate cut. Apparently, the Dow, S&P 500 have actually dropped because the Fed cut rates, which doesn't make a whole lot of material sense. The U.S. stocks erased gains on Wednesday after the Federal Reserve's decision to cut interest rates for the second time this year. Stocks turned negative after Fed Chair Jerome Powell, you know, the legend himself, indicated a December rate cut is far from a far-gone conclusion. The S&P 500 basically fell below the flat line, while the tech-heavy NASDAQ rose 0.2% following a strong session that lifted stocks to fresh all-time highs, probably driven by NVIDIA. A lot of hype over the event from NVIDIA yesterday. But again, what surprised me the most was the dividend plays out there and the interest rate sensitive stocks. And again, I've always said there's a lagger effect to this to some degree because as interest rates get cut, you're going to take a few quarters before you're going to see the major impact on highly debted or mortgage-based companies like the Vanguard Real Estate Index ETF. So this could truly be a reasonable buying opportunity if these interest rate sensitive stocks don't go up when they cut interest rates, because eventually it's going to hit those earnings, which also came as a shock to me that SCHD dropped as heavy as it did today. I'm again down 1-2%. I want this to be a fine reminder for you guys of why I still think it's so prevalent to focus on the best companies in the world over perhaps chasing dividends. And if you are in retirement, to make sure you're getting diversity across your dividend portfolio to avoid moments like this where it doesn't make any real sense that the S&P again is performing so well. I mean, it's basically flat on the day, but the Dow is getting wrecked and our tech companies are absolutely crushing the market. In fact, as many of you know, around my portfolio for test for fun, and I might do this with covered call ETFs just so we can get a one-to-one comparable, but I did build out a buy the effing dip basically a dividend portfolio of 10 stocks that were all mega cap companies trading down off their 52-week highs. And obviously it's still too early to tell as this was created October 21st, just an odd week ago, but it is down almost $1,000 over my portfolio that continues to propel to all-time highs seemingly every day because of the concentration with tech in the S&P. My fiance and I, as many of you know, have 15% of our combined accounts just sitting in Google and Meta. We've split those shares between our accounts to hopefully get the benefit of the returns coming because they materially are the best companies in the world. I'm not buying them for the dividend. I'm buying them because fundamentally what matters the most is companies that have the fortitude, balance sheets, and trajectory with future expectations and investments to take me to the moon and back in a very path of least resistance to return, right? It doesn't take a whole lot of running through companies to figure out what's great, but I always feel like people kind of get stuck in their ways of investing that detriment kind of these returns that we're seeing. So I'm going to take a quick breather here. Let's come back and we're going to see if my Meta shares are working to my favor. And that doesn't mean something crazy can't happen overnight. I don't have overnight trading. So even if earnings are good, doesn't mean the stock's not going to go down, guys. Remember, This is speculative. It's for entertainment purposes only, and hopefully to print me a few extra tendies because the market's been pretty damn bullish. So why the hell not? Let's see how this turns out. Well, folks, how the tables have so quickly turned, in a fine reminder of entertainment value only, which is why I didn't make this during the day, because I didn't want too many degenerates following us into these insane trades. I can't get over, in our chat group, we have people making tens of thousands of dollars on the Google trade right now. I should have ran into the Google, but instead we 2x levered Meta. I feel like it was such a small trade, it's going to be insurmountable to the returns. We're still getting off Google regardless. I think I bought 68 shares of the METU, but why is Google tanking, or Meta tanking, and Google running so aggressively? Honestly, these were incredible Meta earnings. I'm really shocked that the stock is even down, but it might be the initial reaction to the earnings per share dropping an insane 83%, which might come as a bit of a shocker if you're just looking at it at a glance. But I have reason to believe that this will likely turn around because it's a one-time tax bill, thanks to Trump ruining my returns here. But regardless, from my understanding, they would have beat earnings per share by over 10% of analyst expectations if it wasn't for this tax bill. Otherwise, I mean, look at revenue up 26% here, guys. Nothing short of incredible. CapEx is going up. Income from operations still up 18%. On the Google side, absolutely crushing here. There's a reason these are like our two largest positions still, guys. Like, my lord. I mean, look at the absolute insane revenue growth here from 88 billion to 102 billion. Google's having an annual run rate of $400 billion a year, guys. Operating income, 31 billion. My God, and earnings per share from 212 to 287, nothing short of astonishing here. Google search continuing to grow. YouTube, again, doing over 10 billion now in ads. Google services alone, like crushing it. The Google service total here, I mean, from 76 billion to 87. Cloud, 11 to 15. My God, guys, like these numbers, again, nothing short of astonishing, but Meta kind of getting picked on here, even though their guidance for next quarter is going to be incredible. So, I mean, there's lots to look forward to here, guys, regardless. I think it's been fun playing the earnings. I don't know if this is something I want to do more often into the future. Again, I don't really care if I lose a bit of the position here. I go in with the expectation of this purely being nothing more than fun. But yeah, my God, guys, I mean, let's see where we're at here. So yeah, Meta's down still 6.48%. Google's holding up. We'll see if it runs closer to 300 in market open tomorrow. I think Meta could be saved, perhaps on the earnings call. It looks like people are already picking the dip up after hours. I think this is nothing more than a buy the dip opportunity. And as I said, regardless of what happens with my 2x leverage shares, which, I mean, worst case, you're down $500, whatever, tomorrow, I will just immediately roll it over into the underlying Meta stock. And somebody was telling me, if I'm just going to hold the Meta stock, why not just keep the 2x leverage shares and maybe do that until they recover? But I usually don't like the volatile risk. But this, again, is playing with 0.0 percentage points of one's portfolio, and not something I recommend for the reasons we're seeing here, but it'll be entertaining tomorrow to see where we wake up and how much I am down on that position. Again, I think material is just under a few thousand US. So what is that? If we're down 5, we're gonna be down about 12% on that. So yeah, maybe 300-400 US. Nothing too material, but again, we'll see what tomorrow brings. But I'd love to know if you're holding these shares and these positions, because again, like, what a crazy run we've been on today, and what a crazy start to tech earnings. I'll do a bigger update as time goes on here, especially with Microsoft, because Microsoft's also down 3%. Google being the big shiner. I mean, obviously with the extent of what we have in our Google shares, probably wiping a lot of our losses today, but balancing out here. I'd love to know what you think about all this down in that comment section below.